Hello, everyone. My guest today is Kate Chernis. She's the founder and CEO of Lately, which uses AI to automatically transform long-form content like blogs, podcasts, and videos into dozens of smart social media posts. It learns will yield the highest engagement from your audience. She's a former marketing agency owner and created the idea for Lately out of spreadsheets for old clients like Walmart that got him a great ROI. She's now bringing that power to all of you. Kate, you ready to take us to the top?
I'm so ready.
This is great. Okay,
Let's
so
do it.
so so how much of this is like AI versus like a human powered back end? How many engineers are on your team?
Yeah, so we're a really lean team actually. So there's three on the team
Okay.
that are full time, and then we use some other people auxiliary. About 82% of the brain is built in house, and then we've since integrated with C3, Watson in the beginning, that kind of thing. So we recently also brought on a professor at Shanghai University who's got some crazy, crazy AI accolades. So he's been helping us do some cool stuff that I'll share with you maybe in a little bit.
I love that. Okay, so three on the team total right now.
Yeah.
Okay. And so,
No, not on the engineering teams. The whole team is about 14 strong.
oh, perfect. Great. Okay,
Yeah.
14 and 3. Let's take a step back for a second. What year did you launch the company?
2014. I can't even believe that's true. I love it when someone says to me, like an investor will be like, "What's taking so long?" And I'm like, "Okay, couple things. Amazon isn't profitable yet, number one. Number two, Facebook took at least 4 years. So, female founders, do you know this, Nathan? We have to work 98% harder than our male counterparts.
I know,
to
and
get
I actually need to do a better job. I don't do anything in my outreach to founders to target specific founders. It's just sort of been natural. But if I don't actively recruit female founders to go on the show, it just doesn't happen. So I'm really glad that you're on. And you know what? The other thing that I sort of struggle with is I never want to feature a founder because they're female. I want to feature them because they're a great founder.
Yeah, I mean, that's bullshit, by the way, right? Like, I
Yeah.
used to be a rock and roll DJ. My last gig was broadcasting to 20 million listeners a day for XM. So, like, no
Wow.
shakes, right? No small shakes. And I remember, like, not at XM, but at other radio stations, having the directive to play 2 to 4 female artists an hour. And that was annoying to me, honestly.
Yeah.
Right? Because it was like, it didn't go with the vibe I was playing. Not that they were female, but like, I wanted to play guitar, rock and roll. And there's not a lot of broads who do that super well. Joan Jett, baby.
Mm-hmm.
So,
Da da
yeah.
da da da.
There you go.
Okay, so 2014, and take us back to those early days. I mean, do you remember the revenue you did in that first year?
So we actually just were in market only 3 years ago. I can tell you, I don't remember, but I remember last year pretty well. So last year we were at $25,000 MRR, and we are now at $74,000 MRR.
Oh,
so
great.
that's 196% increase in 10 months.
That's incredible. So what did you prepared? You knew exactly what I was going to ask. What drove the growth?
Yeah, a number of things. So number one, we only use Lately to market Lately, nothing else. So our own AI, which is all organic, right? We don't do any paid ads, no cold calls, and no cold emails. What we've learned is that the AI is so good at finding the messaging that you want to read, write, or hear that our leads are already warm. So we look for customers that are liking, commenting, and sharing, and then we engage with them and then move them into DMs. Our demo is our KPI. The demo has always had a 50% or higher conversion. It's been at 98% for the last 10 months.
Wow. How many demos do you do a month?
I know my weeks, so,
Okay, weekly.
so I know weeks better. It can be between 30 and 50 per week.
Whoa.
Generally. Yeah. So we have more leads than we can handle. We're, one of those actual growth constrained companies. But it's been interesting. So only using Lately is a big one. Also, so Nathan, I'm hell bent on upending the SaaS sales model, a funnel model. I think it's completely broken and old and dinosauric even, right? It doesn't apply anymore. Nobody wants to receive those cold calls. Nobody wants a bank of SDRs smiling and dialing, who also, by the way, are a pain in your ass. They stick around for like 4 or 5 months, if that, and then leave. So you're constantly rehiring.
Mm-hmm.
So why not instead make everybody an Uber champion? Like, instead of me just being on the cover of the magazine that we're selling, let me put my whole team on it, right?
Yeah.
So Lauren, Chris, Ankit, Ben, right? And make them social animals, which they are, and merge marketing, sales, and customer service which is what we've done, right? So my job, back to radio, is to make you not a listener, but a fan, not a customer, but an evangelist. Because an evangelist is going to go out and get me 30 more customers.
Yep.
Right.
Yep. So have you built a community here that where can I sort of, and what platform did you use to do it?
Yeah, we have. And we've built it first on social. So all the places, LinkedIn, Twitter, Facebook, Insta. And then we moved it internally to a customer Slack channel, which we recently launched. What's amazing to us is that, honestly, since March of this last year, every single day, at least one person has spontaneously posted something wonderful about us on social.
Oh, I love that. I love that.
Yeah.
So you're saying a lot of the growth from 25 to 74,000 bucks a month over the past 12 months has been organic and sort of word of mouth?
All organic and word of mouth.
So no paid?
No paid whatsoever. Yeah, we stopped that a long time ago. Paid is dead. I mean, there's tons of data about this out now. Freakonomics just did 2 episodes on this the last couple of weeks, in case you guys listen to that podcast. But it has been for some time. I mean, Facebook and Twitter are making it very hard for you to do paid and do it well, right? And there's a reason. They want you to go there and be active and organic. Cambridge Analytics, F that up for everybody, frankly, right? But it's taking marketing. People aren't catching on. You know why? Because they're so lazy, right? Nobody wants to do any work when it comes to sales and lead gen, which is shocking to me, right?
So this is working for you. How many customers are you now serving today?
378 customers.
And how many a year ago?
I need to go look, but I think it was roughly 100, 120.
Okay, got it. And are all those 120 still with you today?
Ish. We watch cohorts churn. And so what we've learned is price point is a big one, right?
Yeah.
So a year ago, we were selling a lot of people at $99. That was our price point. Now it's $300. That's our average price point per customer. And we've upsold to much larger customers. What's been interesting to us is about 20% of the people that fit our key demographic now who churned in the past have come back.
Oh, nice.
Right.
Yeah.
So the price point did something, which was it made the value more clear. That was number one. But also we did something. So back to your earlier question. So a couple years ago, and I'm going to back up. A couple years ago, I was in New York and I'd raised a round of $2 million and I couldn't find a lead.
What year was that? 2019?
2018.
Okay. So you raised $2 million like pre-product basically.
I had raised $2.7 million. And some of it was pre-product. Yes.
Yeah.
And then some of it was product, but no sales.
Yeah.
Right. And
that's all you've raised to date, 2.7?
2.67. Yeah. 2.7. Yeah. And then when I had that 2 million circled, I couldn't find a lead. Right. And that's when that data came out about female founders not getting the funding. Right. And only 2%. And so Joanne Wilson is one of my investors and on my board. She's the Gotham gal, one of New York's most prolific angels. She's balls. And she was like, hey, this is what's happening to you. And I was like, what? And so I had no choice, Nathan, but to drop my burn from 100K to 10K, which is
net,
pretty amazing.
Net or gross? I assume net.
That's net. Yeah.
Yeah.
Right. Monthly. And also monthly. And so, but that also means most of my staff didn't get paid for the last 2 years. Okay. I doubled our sales in that time and I landed some big clients, SAP and AB and Bev. And then I got us into Jason Calacanis's launch accelerator out in Silicon Valley, right? So he's This Week in Startups host for people who don't know. So I flew out to San Francisco every week for 4 months to do a demo day, right? I graduated in the top 3 of the class, won the final demo day, had a term sheet in hand. I'm oversubscribed, $4 million, and the world explodes.
Yeah, COVID.
Yeah. But I had a couple of things. I didn't love that term sheet, so I was dragging my feet, to be honest. It was difficult for me. I couldn't please all the people I needed to please.
Well, where were you at though? I mean, Kate, at the end of 2019, I mean, do you remember like how much cash you had in the bank and what your burn was then?
Oh yeah, my burn was still 10K then.
Okay, and how much cash in the bank?
Anywhere between 13,000 to 24,000.
Okay, so you're operating like right on the margin here.
Super lean, super duper lean, right?
Yeah,
and that's, by the way, I mean, that's just, I wasn't paying a bunch of people, so like I owed my staff money. You know? So I mean, it's much leaner than that, really. And then what I did though is before I went and stuck my head in the sand, because hey, I failed, Nathan, twice, not once, but twice, right? And so this felt pretty bad, of course. And I said, all right, I need to just take a break. The world is collapsing. My entire family wants to Zoom call with me, which is the last thing I want to do with anybody. I don't want to connect. I want to disconnect, right? So my head of growth, Lauren, she was my head of customer service at that time. She was outselling every sales gun we ever brought in by 3-1, by the way. And I said, just run the company. I need to go die for a second. But before I do, can you please release this feature that everyone's been asking us for? And that was the video clips feature, right?
Mm-hmm.
So Gary V saw that. Somebody who he works with made him a Twitter channel out of that, showed it to them on his phone. And he was like, oh my God, I need that now, which was great. The change for us was we stopped having to explain what Lately does. We could just show them. That Twitter channel.
Yeah. Right. So what did you close out the funding story for me? When did you close capital? And if so, how much in what year?
No. And I didn't actually,
okay.
I didn't close.
So you didn't raise 2.7 million. You're still bootstrapped.
No. I raised 2.7 in the beginning
of 2018.
No, 2014 to 2017.
Oh, okay. So that's what funded it from, and then you were going to do another round, and you ended up not doing that.
Couldn't do that. Another round of 2.5. Couldn't do that. Right. So I fail.
What was the valuation you raised at in 2014? Do you remember?
The last round I raised, it was a 7 million post.
And that's the one in 2014.
It was sorry to be confusing, but my first round in 2014 was $250,000.
Oh,
right?
okay.
So the 2.67 in total that I raised of all priced rounds between 2014 and 2017, right? Total
so you did that round at 7 million valuation was in 2017.
Yep, that was in 2017. Yep. So then we go to that 2018 round, can't close it, and then this last year can't close it. But the other thing I did before I passed out on the couch and died was I said, it was before I knew I wasn't going to close this round. It just occurred to me, like, I feel like the world is going to be crazy right now. I know that I need more runway to close this round. I took out a loan of $50,000 from one of our current investors who I trust and love. And it gave me just that breathing room.
What interest rate?
I think it was not much. Like, I want to say we've already paid more than half of it back now.
Mm-hmm.
So I want to say it was 4%.
Okay, so not crazy, very friendly. Yeah.
Not crazy. Yeah. Sorry, we have a lot of.
No, that's good. I mean, that means you have people that's backing. I mean, you can't build this without that. So, hey, just because we have about 3 minutes left, I want to get as much of your story in here. So 378 customers today. If you look at your churn over the past 12 months on a revenue basis, what's that been?
Yeah, the churn is 2% per month or less.
Okay, and what's expansion when you add back?
You mean
upsells?
Sorry.
Upsells.
Oh yeah. So the upsells, we move them from monthly into annual.
Mm-hmm.
Now, as you know, that's not the best move for the company overall, right? But it is the best move when you need cash in the bank.
Yeah.
Which is what we've needed.
Got it.
Right.
So your net revenue retention annually then is about 76 to 80% with 20% churn and minimal expansion.
That's right.
Yeah. Interesting. Okay. So this is great. You've got a flywheel that's working. What do you think you can hit next year in revenue?
So we're certainly looking at $1 million in ARR by January.
Yeah, of course.
And so the next year it's going to be interesting. So we have a partnership with Gary V.
Mm-hmm. What does that mean?
I can't give you all the details, but it's all about Gary driving ARR to the company.
Does he have equity in the business?
He is becoming an investor in Lately, yes.
Got it. Is he the exclusive investor in whatever round you're raising right now, or is it a bigger round?
We're actually deciding that right now because I'd be at Series A, obviously, if I want to, but I'm not sure I need to sell 20% of my company, and we're convinced that I don't. We're convinced that we can make this a multi-million-dollar company on our own in this lean way, and really just take in a couple $100,000 to, ease some annoying pain, but not actual pain, just annoyance, right? With the team that I have now. So I'm most excited about that because I'm tired of working with assholes, Nathan. Yeah. I'm really good at the dog and pony show. I can dance, no problem, right? But do I want to dance anymore? F no.
I love that. On that note, Kate, let's wrap up with the famous 5. Number 1, favorite business book.
Favorite business book. It's called Pitch Anything. It's totally cheesy, but it's all about the psychological manipulation of sales.
Number 2, is there a CEO you're following or studying right now?
Other than myself? No, I'm completely self-absorbed.
Number 3, what's your favorite online tool for building lately?
For billing or
building? Building.
Like the product itself, you mean? You're asking me questions where I only know like enough to be dangerous. So, I mean, I'm going to have to answer for my CTO. And would that be GitHub? I assume.
Sure.
Right.
Number 4, how many hours of sleep do you get every night?
I don't know. I wake up between 3 and 4 or 5. Then I take some CBD oil and hope I fall asleep. And then I have a CBD hangover for the first 4 hours of the morning. So, you know what this is like? You relate?
This is hysterical. Okay, so who knows? We're going to be a big question mark there. And what's your situation? You mentioned your husband's downstairs cooking chili, so I assume you're married. Do you have any kids?
No kids. Lately's my kid.
Okay, no kids yet. And can I ask how old you are?
I'm 46.
46. Wow, I would have guessed much younger. Last question.
Thank you.
What's something
I
you
invest
wish?
a lot in eye cream. So.
There you go. What's something you wish you knew when you were 20?
To listen to my gut, because that sucker knows.
Guys, there you have it. Kate Chernis, 14 folks on the team building Try Lately, up to a $900,000 run rate today, up from a $300,000 run rate just a year ago, 196% year-over-year growth. They have raised $2.7 million, $2.5 million in 2017 and a $7 million valuation, but now they're in a great spot. 14 people on the team, healthy growth, mainly word of mouth, spending nothing on acquisition, 24% annual churn, a little high, but that's to be expected in this space, 76% net retention as she looks to continue to scale. Kate, thanks for taking us to the top.
Love you, Nathan. Thanks.
One more thing before you go. We have a brand new show every Thursday at 1 p.m. Central. It's called Shark Tank for SaaS. We call it Deal or Bust. One founder comes on, 3 hungry buyers, they try and do a deal live, and the founder shares back-end dashboards, their expenses, their revenue, ARPU, CAC, LTV, you name it, they share it. And the buyers try and make a deal live. It is fun to watch every Thursday, 1 p.m. Central. Additionally, remember, these recorded founder interviews go live. We release them here on YouTube every day at 2 p.m. Central. To make sure you don't miss any of that, make sure you click the subscribe button below here on YouTube, the big red button, and then click the little bell notification to make sure you get notifications when we do go live. I wouldn't want you to miss breaking news in the SaaS world, whether it's an acquisition, a big fundraise, a big sale, a big profitability statement, or something else. I don't want you to miss it. Additionally, if you want to take this conversation deeper and further, we have by far the largest private Slack community for B2B SaaS founders. You want to get in there. We've probably talked about your tool if you're running a company or your firm if you're investing. You can go in there and quickly search and see what people are saying. Sign up for that at nathanlatka.com/Slack. In the meantime, I'm hanging out with you here on YouTube. I'll be in the comments for the next 30 minutes. Feel free to let me know what you thought about this episode. And if you enjoyed it, click the thumbs up. We get a lot of haters that are mad at how aggressive I am on these shows, but I do it so that we can all learn. We have to counter those people. We got to push them away. Click the thumbs up below to counter them and know that I appreciate your guys' support. All right, I'll be in the comments. See ya.